Hi, I'm Paul Sanger for the Finance News Network, and today I'm in beautiful Noosa for the Noosa Mining Conference. Earlier today, I called up with Ardea Resources MD, Andrew Penkethman, and this is what he had to say.
Andrew, many thanks for your time, for coming out of your booth to spend some time with us on the camera. Let's get straight into the project. What's the current status of your Kalgoorlie nickel project?
We've commenced a definitive feasibility study working with Sumitomo Metal Mining and Mitsubishi Corporation, and the DFS budget's $98.5 million, and that'll take approximately 18 months to conclude and will underpin Australia's lowest cost nickel cobalt producer.
And talk me through those JV partners that you have in Mitsubishi and Sumitomo. How important to have those as partners for your projects?
They're the best possible partners in the world because they bring in the essential technical expertise, and they're already working very closely with the Ardea and Kalgoorlie Nickel Proprietary Limited team who's completing the DFS. But they've also got access to some of the most competitive priced debt in the world, and they'll be huge assistance to see the project move forward and succeed.
And you said that the DFS is progressing nicely. Just remind us on when we can expect the study to conclude.
So it'll be concluded in the second half of 2025, and it'll be undertaken to a very high standard, as you can appreciate, with a budget of $98.5 million.
And then, let's just talk a bit about nickel. It's been in the headlines, some for the wrong reasons. It's had a big fall recently. There's signs now that it is starting to rally. We're seeing some projects being turned off. What's your thought on the nickel price in the next 6 to 12 months in supply and demand?
Yeah, I think the death of the Australian nickel sector's been greatly over-exaggerated. If Ardea were in production today through the Kalgoorlie Nickel Project in Gary Hub, we'd be the lowest cost nickel producer. We demonstrated in last year's PFS operating cost, including the cobalt byproduct credit of under $6,000 a tonne. We compare that currently with the nickel price at about $16,000 a tonne. So we are in the bottom cost quartile. We can be globally competitive with our operating costs, and I think the outlook for the nickel sector's never been brighter. The current market surplus will move into deficit in 2027, and the demand from both traditional uses such as stainless steel and lithium-ion batteries and large-scale energy storage is only going to continue to increase, and we see the nickel price appreciating significantly above current levels.
Now, Andrew, I'm going to put you on the spot now. Big game of football with rugby going on tonight. Maroons, New South Wales. What's your tip?
I think New South Wales, they're overdue.
Andrew, absolute pleasure. Thank you for your time.
Thanks a lot, Paul. Fantastic catch up.